Good morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Senate finally approved the CREATE bill, which seeks to immediately reduce corporate income taxes, or CIT, to 25% from 30%, following months of lengthy discussions on the tax proposal. The bill eventually seeks to lower the CIT to 20% by 2027. NEDA Acting Secretary Carl Kendrick Chua touted the passage of the bill, saying it will help the economy bounce back faster. He noted it will give all small and medium enterprises to be more productive and competitive. House Ways and Means Committee Chairman, Albay Representative Joey Salceda, said there's no need for a bicameral conference committee as the lower house will just adopt the version approved by the Senate. The bill, which has been certified as urgent by President Duterte, hurdled the House last year. The CREATE bill will also grant exporters and domestic industries between 4 and 7 years of income tax holiday. They are also given the option to later pay 5% tax on gross income earned for 10 years. The bill also seeks to rationalize fiscal incentives through a performance-based and time-bound criteria. Senate Ways and Means Committee Chairman Pia Cayetano also said the CREATE bill mandates the DOF-led Fiscal Incentives Review Board to oversee incentives granted by investment promotion agencies for investments above ₱1 billion. Senator Richard Gordon, the lone dissenter, had proposed to exclude a number of economic and free-port zones, such as the Subic Bay Metropolitan Authority, from the bill's coverage. However, his amendment was rejected by the chamber. All right, finally, a happy Friday. Our markets as relieved as we are to be ending this week.
Okay, I'm very relieved to be almost ending this week, Jess, but let's take a step back at what markets are really looking at today, and that is, of course, the vaccine, diba? And the vaccine hopes, and a lot were saying that optimism was already priced in, so there's been a lot of pullback, and of course, there's a lot of concerns for it going on. So you can see in my terminal, very quick peek at where we are in terms of cases. We're really far from that, curve, let's say, flattening in any case, because we have 500,000 new cases worldwide just yesterday, and in terms of deaths, that's close to 9,000 deaths in one day. So it's still really far from that. So even with 3 successful vaccines, so to speak, that we have on the table, there's still sentiment that remains fragile. So the virus toll, of course, continuing to rise, particularly in Europe and the United States. I'm going to take a quick peek at how markets were performing overnight, especially in Wall Street, and you can see a bit of a pullback nevertheless from the S&P 500 down by 0.2%, the Dow Jones as well, but the Nasdaq back to rotating na naman to these stocks that tend to be defensive during lockdown periods. Recall that a lot of areas are now under lockdown in Europe. You've got New York City also shutting down schools. Nevertheless, despite all of these things, global stocks are remaining on track for the best month on record. We're, of course, ending November already. This is the last trading day for us. It's a holiday on the 30th. And this, of course, comes on the back of the U.S. also shut down still for Thanksgiving holidays yesterday, but nevertheless, you've actually got the global stocks up by 13% in the month of November. So the valuations are in the highest in about 20 years. So very interestingly there. Now, when we talk about the Philippines and whether we are going to be benefiting from the vaccine, still a lot of questions on the air. But one development there's been an agreement that has now been signed for the purchase of 2 million doses of that COVID-19 vaccine from British-Swedish pharmaceutical firm AstraZeneca. That will be signed today. The chief implementer, Galvez, is the one that is pushing for this. Aside from him, there's also presidential advisor for entrepreneurship, Joey Concepcion. He is representing the private sector in this play, and he is trying to procure 2.5 to 3 million doses of the vaccine. So there's actually going to be a 3-way agreement. You're going to be having AstraZeneca, You're going to be having Galvez and Concepcion, which is going to be representing the private sector. And then you're going to be having, of course, the government here. Now, what is Concepcion saying? The vaccines, which will be partly funded, of course, by our taxes, the government, but also with some donations from the private sector, will then be donated to the Department of Health, and the deployment should be done by the Department of Health. Now, Jess, I just have to point out one area of concern. This was in a Bloomberg article.
Mm-hmm.
AstraZeneca is actually likely to conduct further global trials after current studies raised questions. And this is according to their CEO, Pascal Soriot. And this is just recent news. And recall that AstraZeneca is doing a zero profit program for this, which means that the vaccines are going to be as cheap as possible. It's actually just around 500 pesos for 2 doses. So that's quite cheap than even just getting tested, diba? But again, a lot of concerns still on that. So again, they're going to be signing that procurement deal, but the trials need to be continued. So it's not set in stone yet. Now, realistically, what is the timeline for the rollout? This according to Galvez, end of next year or early 2022 pa. Best case is second quarter of 2021, and it's not as if it will be finished right away. Vaccination program may take up to 3 to 5 years. So let's take a quick peek at how we are opening here. Unfortunately, that pullback is real. It's down by 0.4%. We're still above 6,900, but we were not able to go back to those 7,000 levels, which we were already able to breach. So we are 3 days. I'm going to pull back the 3-day chart. Third day in the red, we are now below 7,000. You can see that we're down by around 3% already in the past 3 days of trade. And this, of course, was expected by a lot of analysts because we had closed at a 9-month high just on Monday, and we had reached the highest valuation since January of 2018. Now, this, according to BDO's Jonathan Ravelas, there was a wave of bullish sentiment. Investors are now taking a reality check. In fact, in the past, in Tuesday and Wednesday, we lost $3.1 billion just in market cap. We saw the biggest net foreign outflow since the month of August. We lost 2.3 billion pesos to our foreign investors. So just a quick peek on our banks here on the back of some news on that space. So recall that the BSP is creating policies for what they call digital banks, diba? So they've now outlined those policies. So they must have, these digital banks must actually have a sound digital governance. So of course, a lot of safety measures in place when it comes to data management and security, robust, secure, and resilient technology infrastructure, and effective data management strategy and practices. So they will be exposed to the same requirements as regular banks, and the central bank may actually limit the number of digital lenders. Nevertheless, the banking space not doing very well this Friday morning. That's down by 0.6% for the sector.
All right, Dan, from banks, let's move on to one specific stock here, which has been relying on cost-cutting measures to stay afloat, and in fact, has now raised more money. How's ICTSI doing after that share sale?
Okay, so this was the biggest mover yesterday, and you can see that drop, right? So it's already down by 7.2% in just the past 3 days. So what did they do? They entered into a placement agreement, right, for a share sale, 40 million treasury shares that were sitting in their balance sheet, priced it at 117 pesos per share. That's actually 3.9% lower than what it was trading, and you can see that 3 days ago it was at 127. 7.40, and then they priced it at 117. So this of course dragged down the price. Everybody started selling off. And what are they trying to do? They got proceeds of 4.68 billion pesos, and they're going to be using that for their capex. Now recall that this comes after they've already reduced their capex plan for 2020. So that's actually very interesting. Reduced the capex plan, did a lot of cost cutting, and selling their treasury shares, needing to raise money to fund all of those capex plans. ICTSI, though, seems to be recovering right now, at least up a touch to 116 pesos and 90 centavos, still not at that 117 peso share sale price. Now, just we have more markets later on. In the broadcast, we've got Philstocks Japhet Tantiangco. Nevertheless, things are still, of course, looking quite gloomy for the economy. The latest one to add to that pitch is ADB. What are they saying now?
Okay, this one particularly regarding joblessness here. They are saying that's going to remain elevated even through even up to 2021 here. They're in fact forecasting unemployment to stay at the 9 to 10% level come 2021, still in double digit figures here and quite double as well compared to pre-pandemic levels here. According to Kelly Bird, he is ADB's country director here for the Philippines. He said this during the Business World Virtual Economic Forum, which I hosted. He did say, that unemployment is going to remain high as scars from the pandemic will still reduce potential productive capacity of the economy in the midterm. Recall, of course, that pre-pandemic, pre-COVID-19, unemployment was at 5.1% by the end of 2019. That, of course, peaked come April 2020. That hit 17.7%. And then gradually eased come July at 10%. Now, government leaders are forecasting unemployment to actually hit 11 to 30% by the end of 2020. Again, the ADB is forecasting come 2021 that's going to hit 9 to 10%. So how are Filipinos supposed to hold on to their jobs? Well, according to Kelly Bird, he's saying offices or at least companies need to increase investments in skills development, at the same time invest in apprenticeship as well as workplace improvement. But moving over to the broader economy here, Kelly Bird said, that ADB is expecting the country's GDP to actually shrink by 7.3% this year. But they're saying that the worst is already over for the Philippines. These sectors are already showing signs of recovery here. Particularly, we're talking about exports as well as imports, remittances, and even manufacturing already seeing signs of a bounce back here. But according to him as well, recovery is going to be fragile and slow as consumer and business confidence were badly hit by the pandemic. According to him as well, recovery will depend largely on the country's pandemic response in the next 12 months and the pace of safely opening the economy. They are expecting GDP to actually rebound to 6.5% come 2021. But they're saying as well that the Philippines won't be reaching pre-COVID inflation-adjusted GDP until 2022, and its per capita GDP won't actually return to its pre-pandemic levels by 2023. But according to them as well, the Philippines is not alone in this path. Many countries are going this direction.
Okay, Jess, so 2 more years until we see
Right.
normalcy there. Now, nevertheless, how is the country's fiscal position going to aid in that bounce back? A lot of contention still on that fiscal package.
Right, exactly. Now, on the same forum, the Business World Virtual Economic Forum, in Danie of World Bank, the country director for the likes of the Philippines and Brunei and Thailand, he did say, implementing agile fiscal, accommodative monetary policy, and at the same time advancing structural reforms will actually help keep the Philippines poised for recovery within the next 2 years. He noted how debt to GDP ratio in 2019 was at 39.6%, the lowest in the region. In fact, one of the lowest in the region and in the world even. But that is expected to reach 53.9% by year end due to, of course, the government having to expand its loan as a response to the pandemic. But according to him as well, the Philippines is in a strong fiscal position, which gives it much room to actually ramp up growth and at the same time fight the virus and save lives without threatening fiscal sustainability. He also commended the government's fiscal response, saying particularly its direct transfers through wage subsidies and emergency grants. At the same time, he commended the low interest rate environment, which he says actually encourages lending as well, and that these will actually help struggling companies save jobs and stimulate spending. Now, given that, we're talking about reviving the economy here. That, of course, would entail that the Philippine population has enough health safeguards as well to return to work and make a living without the risk of infection. That and other insights from business leaders and economic experts in this year's Business World Virtual Economic Forum, in this report by Shaila Francisco.
While the government claims the worst may be over for the Philippine economy, recovery from the COVID-19 pandemic may take longer than expected, at least according to some international financial institutions. Speaking in a 2-day virtual forum hosted by Business World, the World Bank notes that full recovery is still hinged on people getting their jobs and income back. The Asian Development Bank agrees, saying pre-COVID economic growth won't take place until at least the year 2022.
But this recovery is going to be fragile and slow as the pandemic affects consumer and business confidence the most.
The ADB also notes that while remittances and trade are picking up, the tourism and the property sectors remain a problem. The multilateral bank says infrastructure spending is critical to aid economic recovery in the next 1 to 2 years, with its multiplier effect on job creation. Business leaders also stress the vaccine rollout as a key to revitalizing consumer confidence.
The next big wave will really come with vaccines, as you might expect. And so the vaccines and any success that we have on that front will be a far more relaxing component of how people look at the future if they realize that there is a solution to their potential health needs.
The ADB is now in talks with the Philippine government regarding vaccine procurement. The Ayala Group, for its part, says it will continue to invest in the healthcare space. PLDT Smart, on the other hand, vows to continue improvements in customer connectivity to assist the health and education industries, as well as businesses shifting to e-commerce.
We do have to develop the digital ecosystems that began connectivity to make it happen.
Overall, the World Bank knows the country is well positioned in terms of recovery.
Improved public health policies, continuously agile and sound fiscal and monetary policies, and a determination to implement structural reforms, the Philippines will remain well placed to bounce back.
The World Bank also urged Philippines to capitalize on the services and e-commerce sector, calling them the future of global trade. Shaila Francisco, VR1 News.
We'll have more news when Business World Live returns. Stay with us. Good morning. You're still watching Business World Live. I'm Jess Delos. Hot money outflows more than tripled to nearly $4 billion in the 10 months to October. That's despite strong inflows in October, according to the central bank. The Bangko Sentral said higher net outflow of foreign portfolio investments during the 10-month period was due to uncertainties brought about by the pandemic to the global economy and financial system. In a report by the Philippine Star, the BSP also cited geopolitical tensions and extended quarantine measures in select regions in the country as factors in the higher outflow. Despite higher net outflows of speculative funds, the country booked a net inflow of $440 million in October alone. This is 4 times higher than the inflows posted year on year. It also ended the 7 consecutive months of net outflows, which started in March. Major sources that accounted for at least 80% of the speculative funds last month include the United Kingdom, the US, Singapore, Luxembourg, and Hong Kong. The BSP expects net foreign portfolio investment inflows of $2.4 billion this year and $3.4 billion for 2021. RCBC Chief Economist Mike Ricafort said sustained decline in COVID-19 cases and positive developments on vaccines should help the Philippines' economic recovery prospects and improve investment valuations. Now, the government is aiming to borrow 120 billion pesos from domestic lenders in December. This is lower than the 140 billion pesos targeted for the month. The Treasury said it will borrow 60 million pesos in Treasury bills and another 60 million pesos in Treasury bonds next month. For the T-bills, the BTR will auction off 91-day and 182-day paper worth 5 billion pesos each, as well as 364-day paper worth 10 billion pesos on December 2, 9, and 16. 3-year and 7-year T-bonds worth 30 billion pesos each will meanwhile be offered on December 3 and 17. National Treasurer Rosalia De Leon said investors remain highly liquid and interested in short tenors due to economic uncertainty brought by the pandemic.
And this from the Philippine Star, a lawmaker estimates the country's economic losses to reach more than 3.3 trillion pesos this year. That's due to the effects of recent typhoons and the pandemic. Now, in a virtual economic forum, Marikina Representative Stella Kimbo said the pandemic's economic damage alone would reach 3.3 trillion pesos, but added that the economy lost another 100 billion pesos because of the recent typhoons. Economic managers through the DBCC see a deeper contraction this year by 4.4 to 6.6%. They also see a slower recovery in 2021 with a possible growth of 6.5 to 7.5% next year. To help cushion the impact of the massive economic damage, Kimbo is pushing for the passage of a third Bayanihan law, noting that the 2021 national budget was passed under the earlier assumption that GDP will only contract by 5.5% this year. Now, the market pullback was expected, but just how in touch is the market's valuation with our real economy? Here to share with us his views, we have with us Philstocks' Japhet Tantiangco. Good morning, Japhet. Welcome back.
Good morning, Ma'am Danie. My pleasure to be here.
Japhet, let's just kick off with this pullback. A lot of analysts had been expecting that. I mean, we had quite the run there, breaching the 7,000 levels. Was this run overly optimistic, or really just something that you were expecting, catching up from having been oversold for so many months?
Well, in our perspective, the rally that we have from October 30 to November 23 of 2020, it was an overstretched rally. The market went too ahead of itself. The only fundamental factor that we see that drove this rally was the improvement of our of our GDP data, of our third quarter GDP data, as well as our third quarter corporate figures compared to their second quarter counterparts. That was the only fundamental thing that we saw that drove this rally. Most of this rally is attributed to expectations that the vaccine will be out soon because of the positive developments of the vaccine candidates, as well as further easing of our restrictions, and finally the economic recovery, which is expected to happen moving forward in 2021 and 2022. But as mentioned, these are it was driven the rally that we had was driven mostly by expectations. It's still far from the fundamental reality. That's why we're seeing the pullback that we have right now.
Let's talk about those vaccine dreams. They don't seem to be dreams anymore. They seem to be realistic, but also realistically, the timeline here, at least in the Philippines, might be taking some time. Are these downside risks, let's say, that we won't be getting the vaccine before the economy starts to feel a real fallout? Is that already priced in the markets?
I believe that's already been priced in. The vaccine timeline, whether it's going to, how long before we would really be able to get that vaccine on the Philippine shore. I think that's already been priced in. The thing that we should worry about now, what that we should worry about really is how the economy would be even after the vaccine has already been distributed here in the country. Because even if we say that the vaccine is already here, or that COVID-19 is already solved, we cannot say that immediately the economy would recover. I mean, it would still be a long process. The damage has already been done. We've already suffered a lot because of the quarantine measures that have been implemented. A lot of jobs has already been lost. Our capital formation base has already been eroded, and it's going to take a lot before we can regain those. So that's what we should be worrying about moving forward.
Okay, what about consumption? So we've accepted that the vaccine timeline might be taking a while, but we still need to have consumer confidence. Are you seeing signs of those in the third quarter earnings and in the fourth quarter as we're ending the year?
Well, given the vaccine hopes, yes, we may see some improvement in consumer confidence. There could be the courage to to go out again, especially right now that restrictions are being eased. There will be courage again on the part of consumers to go out and spend again, exercise their purchasing power, and that is something that's going to help us moving forward.
And lastly, on just the broader economy, we had Carl Kendrick Chua in the Business World Economic Forum saying that it can't all be fiscal. So I think other things need to also pitch in, but also a lot of analysts, especially those watching us from outside, saying that our fiscal spend, if that doesn't get improved, we're never really going to be seeing a recovery here. Do the markets need a bigger fiscal package in order to have a fundamentally stronger rally?
Well, it's really hard to say how we're going to manage our fiscal policy because yes, as much as possible, we need all the boost that we can get. We need more fiscal power. But if you're going to look at our current revenue performance, it has been the decline is continuous, meaning the government isn't really getting much out of the economy in the form of tax revenues. And if you want to spend strongly, or if you want to spend stronger moving forward, then of course you'll need more money. And given that revenue is low, then it means that you're going to be borrowing more just to sustain that strong spending in order to support the economy. So that's one of the dilemmas of the government right now. Take note that that can also affect consumer and investor confidence moving forward. I mean, if you're going to spend too much right now, then it means you're going to borrow a lot of money. And that's something that consumers and investors will be pricing in moving forward. If the government is going to spend too much right now with a little bit of revenues, then there's the possibility that they could raise taxes moving forward, or adjust or pursue, pursue fiscal policies that would help them regain the foregone revenues, which is going to be problematic. So that's one of the things that you will have to price in. And I agree with the acting NEDA Secretary Kalkan Rechua. For this economy to revive, fiscal policy will not be enough. You will also need, of course, to bring back that confidence, business and consumer confidence. That is the number one thing that we need right now. And for us to regain that, of course, we need a clearer picture of where the economy is going to move forward, particularly where are going to move forward in terms of our public health situation. Is the vaccine going to be there? Is the COVID-19 crisis going to be resolved? If we see clear signs that that's going to happen, then business and consumer confidence would improve, and this would help us. This would help in the economic recovery moving forward.
Okay, so still a lot of downside risks there, especially as the markets continue with that pullback, but nevertheless, a lot of moving parts that need to still align before we can see some more confidence and a stronger rally with some legs there. Thank you so much for those insights. That was Japhet Tantiangco of Philstocks.
You're very much welcome.
And that's a first look into the business day. Today is November 27. I'm Danie, Laurel. Okay, I think Jess is muted, but
sorry
go
about
ahead.
that. Once again, catch us again Monday next week at 9:30 a.m. So excited for the weekend now. So I am Jess
Friday,
Santos. We are One
Friday.
News. Have a safe weekend, everyone.